Fantastic. Welcome everyone on Financial Fox Smart Investing with Clem Chambers. Clem, nice to see you on the show again this week.
Nice to be back. I forgot to take the jumper off and look respectable, but you're going to have to see me in my jumpered state.
Well, that means that you have been busy, I guess.
Well, it's interesting. I saw this car, a new car, and it's called, I think it's Nissan. It's called the Jumper. Well, I'd never call a car Jumper. I'd expect the police to make me pull over. That's a joke. Never mind.
Okay, well, it's so interesting because today I was listening a couple of podcasts from Bloomberg and also from CoinDesk, and everybody was talking about the Fed, the economy, inflation. And I said, well, we talk about that every week on our podcast. So it looks like all the podcasts now, they are talking about where we are going, where people should invest, kind of like a panicking mood.
Well, I mean, they did exactly what I kind of said would happen, which is, interest rates, yes, they're going up. Well, we know that. The tightening, we said it was going to be 60 billion a month. Well, actually, it's going to be 30 billion a month. So the important thing, the liquidity, they've pedaled back on cutting off the liquidity. And that's how they're going to do things, by managing the liquidity, not by interest rates. I mean, they actually put up interest rates 66%. People go, what are you talking about? It went up 0.5%, but actually it was 0.75%, and they put it up by half. That's 66%. That's not an indication of finesse now, is it? But anyway, the finesse is going to be in money supply, and that's liquidity, and that's about tapering. That's about QT, which is the opposite of QE. I like to call it reverse QE. So the reverse QT, is going to be only 30 billion, rather than the 60 billion that they said they were going to do. So that's a big step back from, choking off inflation. And of course, they can't get rid of inflation. It's impossible, not for many, many years, because there's this big hole in the world economy because people stop making stuff. Yeah.
Well, and China is again in lockdown.
They're still doing it. So they're still digging a bigger hole. First rule of when you're in a hole, stop digging. Well, China's still digging. So that is a loss of wealth. You can't print wealth. You can print money, but you can't print wealth. So they can't replace the wealth that has been lost. So we're all poorer. So if you wanted to make people feel as if they're not poorer, you print more money, prices go up. They look at the house and say, my house has gone up 200,000, aren't I clever? And that softens the blow. And that's what they continue to do. So you need to invest in things that can't get around their price going up. Commodities. The people that make stuff, etc., gold, all the precious metals, anything actually. My favorite one right now is sugar, because you can't just, you can't print sugar. And, already, this is something that made me go, I'm going to make quite a lot of money here. Somebody told me the first thing that has already disappeared off Russian supermarket shelves is, guess what? Sugar. So, and sugar hasn't really gone up. It's the only one of the few commodities that hasn't gone through the roof. So its time will come. And there are various ETFs of sugar.
Yeah.
I own one called Tellurium sugar. Actually, I'll give you the ticker on that so people can look at it. It's an ETF, so it's not as if it's some weird company that's got a sugar mine somewhere. It's Amex, it's American market, and the ticker is CANE, CANE. Imagine the ticker, that one. And it still hasn't moved, and I believe that it will move relatively soon, because inflation's here to stay. It has to be here to stay. There's a lot of it baked in. They're baking more in. There's going to be carrying on baking more in, so it ain't going to go nowhere. And of course, they could get rid of it like that, and then all our economies will be in a smoking crater, exactly. And everyone will be burning the place down. So they're not going to do that, are they?
Yeah. Okay, well, just a reminder for anyone watching that want to ask a question. I'm watching the live, so any question that you want to pop in the YouTube chat, there is the opportunity for Clem to answer. So we start with the sugar ETF. I remember that you mentioned ETF can be your friend during a recession.
Always your friend, as long as it's a proper one, and it's not a 3 times non-tracking tracker. An ETF should roll up a portfolio of stuff yeah, or something that perhaps you can't get hold of easily outside in the world, like sugar. I mean, you don't want 16 tons of sugar showing up in your front door, or maybe you do, but probably most people don't. So it either wraps up something you can't get your hands on easily, that's sensible, or it actually wraps up a portfolio and tracks an index. Now, when it starts to get something weird, like an ETF that wraps up all the gene splicing and onion farming companies in the world, maybe not so interesting. But if they're actually mainstream things like, wow, I want exposure to copper, then a copper ETF is for you. And you can always roll up a load of different commodity ETFs and have a commodity portfolio, for example. Very good for portfolios, very low management charges, and you know, on the beaten path, they're very, very good. Off the beaten path, as always, the financial guys roll up all these toxic predatorial instruments. So try to avoid those. But you know, sugar, check to make sure it is sugar, check to make sure they've got it, check to make sure the company's a good ETF provider.
Yeah, and I think one of the things that you mentioned, anything that produce stuff, I mean, one of the key thinking is like, you are a winner right now if you own stuff or either you produce stuff.
Yeah, I think that's right. As long as the company is well run, because if it's badly run, they won't put their prices up, or they'll put them up in a stupid way. If they're well run, they'll be going, right, we're going to get inflation for the next 5 years. How can we put up our prices and nobody notices?
Okay, so let's discuss this, because maybe many people are saying, okay, let's look at ETF. How do I pick up a good ETF? Where do I search? How do I go? What do I look for?
I mean, you can literally just go onto Google and type, you know, ETF, commodity ETF, but you can't just go in blind. So you have to read up on it. You'd have to. iShares are a big provider of ETFs, and they've got all the ETFs you want. There's Vanguard. There's loads and loads of people that supply ETFs. Pretty much any ETF you can possibly imagine is out there. You know, you can get a British government gilt ETF. So if you wanted to be exposed to British government debt, then you can buy that. And you pay, you know, your commission, your stock market commission, maybe 10 quid if you've got a decent broker, 5 quid if you've got a really good broker. And the actual fund expenses that they charge the company for actually running those things are very small, 0.1, that sort of thing. So the cost of actually ownership is very, very low. Some of them pay nice dividends. I mean, if you buy the FTSE tracker for the FTSE 100, they pay you a 3.5% dividend. Thank you very much. 3.5%, that's nice. If you go to the UK IUKD, which is the dividend ETF in the UK, they're going to pay you a 5.4% dividend. If you go to an American S&P 500, I know my friends out there, some stateside too, you're going to get a 3.5% dividend for a S&P 500 tracker. I think it's 3, might be 2.5, but there you are. So you bought the index really cheaply, and these dividends drop into your account. What could be better? So, you know, ETFs are very good. Let me give you an example. About 3 or 4 weeks ago, I'm sat there going, you know, all my precious metals going down.
I think many people have been saying that.
And then I thought, right, well, platinum's gone down a lot. That's ridiculous. I mean, electric cars, etc., etc. This is all going to have platinum in it. Hydrogen economy, or I don't know. I'm just going to buy a little bit of platinum ETF. So I bought, I don't know, 20 grand, 25, 30 grand. And I'm going to sell it when it gets back to $1,000 an ounce, which was last night. I made 8.5%, 9%, something like that. And I thought, well, when it gets back, I'm going to sell it. I don't care. I'm just going to buy it now. It's too cheap. When it gets up, I'm going to sell it. No, forget about the long term. I'm going to trade it. Why not? Yes, let's be a trader. It's back up there. I'm not going to sell it.
Yeah.
But, you know, that's a good example. I didn't go and buy Johnson & Matthey. They just gone through the roof. I didn't buy Stillwater. I think that's how you pronounce it. They've gone through the floor. They've got a strike on. I didn't have to mess about with any of that. I didn't have to go buy. I didn't have to ring up Kitco and say, ship me in a plastic box, 27 kilos of platinum. I just went by the ETF. Boom. So I got an exposure of 25 grand. What's that? Kind of like 335 ounces. Yeah. 35 ounces of platinum, like that. Cost me 10 quid.
So basically trade via ETF rather than trying to pick the winner.
Well, and invest. I mean, I just did it because I thought, well, you know, in my model, it's going to go like that, high volatility. Well, what are you going to do? You buy the dip, don't you? Which is, you know, dangerous thing to do often. but I'm just going to do it. I'm not going to go stupid. I'll just buy a small chunk and then, make a bit of money. Thank you very much. Or end up owning more platinum, which I don't care about, owning a bit more platinum. As it happened, I broke my own rules. I should be selling it today, but I'm not going to.
Okay, Clem, now I want to move to something exciting before Zach comes in. Otherwise, it feel like, he can share too much, which is crypto.
What about crypto?
Exactly. And you mentioned before, you need to keep a diversified portfolio, buy assets, like commodities, like sugar. And some people would argue, crypto could be an asset to buy. Some other, they would say, maybe because it's performing like a tech stock, it might not be a good time to buy.
Okay, so look, that's one right back to the beginning. All you need to know, as my commodity trader father told me when I was 9, is which way the market's going. That's what he said, son. I said,
down. It's going down.
Which way's the market going down? So you don't want to buy it, do you? That's it. That's discussion over right there. Now, you make a bit more sophisticated. I thought it was totally wrong. I thought, even as a 9-year-old, I thought that's a stupid thing to say. It can't be that easy. Now I'm an old man like he was. I see that's exactly right. If it's going down, you shouldn't buy. I mean, why would you? What are you playing at? You can short it if you don't mind playing that game. I hate that. I don't do that. But, it's going down. That is the direction of travel. So you don't want to own it. The point is, when's it going to turn? That's the question. Next question as well. You have to be a blooming genius to make money in a bear market if you go long. You have to be a blooming fool to lose money in a bull market if you're long. Any fool can make money when the market's going up. And only a smart person very smart person can make any sort of money on the way down. Very, very difficult. So, which is kind of why I've been suffering recently, because I'm stupid. It's because the market is a little bit bearish in stocks. It's very bearish if you're in NASDAQ kind of stocks. It's extremely bearish. But the end I'm in, it's maybe even a little bit bullish. It's a little bit sideways trading, but very difficult. Now, when is crypto going to turn? That is the question. I mean, it really probably broke down before Mr. Powell saved it yesterday. And I still think that you're going to be seeing that it drift off. I mean, it had a big rally on the Fed loosening because the crypto is not driven by the inflation story. It's driven by the liquidity story, that there's a lot of money around because people are taking it and stashing it. If I had dollars, I was a big dollar guy. Just say I'm an American billionaire and I've got cash coming out my ears. Well, I'm not going to be not putting it into USDC and sticking it on for 5% interest. Why wouldn't I do that? That's what the American government and regulators are so scared about, that you'll take it out of fiat and put it in crypto. But that's a stable coin earning me 5%. I love stable coins earning me 5%. I love that. I just love that. I don't want to be long Uniswap. I don't want to be long SushiSwap. I don't want to be long Cardano. I don't want to be long Ethereum. In fact, I spend every other day taking my Ethereum profits and turning them into USDC. That's actually what I do every couple of days because I don't want to be long any of that stuff. There will come a point when I will. And, if this goes down in the next few days below the low that you've seen 2 days ago, it's going to go down a long way real fast. Okay. And then will be a time to be long.
So basically kind of be smart, playing the yield in a safe way with stable coin and just watch the market.
It's dull to do that. And of course you could take it out and put it into something else. I mean, something I've done a few days ago, was I bought a cyber truckload of Tesla because I believe in our boy Musk. It's going to come through at $55 and the blooming thing's trading at 48. So all you got to do is say, is Musk going to do it? Like he said he's going to do it, or is he not? Because if he does, it's $55 for you, 48. And if he says, oh no, I'm going to go back to my planet, then, I'm going to lose quite a lot of money. Yeah. But I have faith in my boy Musk. And I think there's a good trade there. So, and if you think about Twitter plus Musk plus Dogecoin, that's a pretty exciting prospect there because it is inevitable that every social media account will have a crypto wallet attached. It's inevitable. It's just a matter of when. And of course, Musk plus Twitter plus Dogecoin would probably set that avalanche off down the mountain. But whether that would happen fast enough, because it won't, the engineering behind doing that in a big infrastructure piece like Twitter would probably take.
That's interesting. So, I mean, the Musk way could actually unlock a three-way investment trading opportunity.
Well, no, it would just mean that crypto is on the way to the mainstream, because Twitter and plus crypto. You see, there was a scam on YouTube, and the scam was some scammers had taken a clip of Musk and Cathy Wood and Jack Dorsey from a live stream that they'd done in the past, put it up live on YouTube, and said, "Oh, if you send this account one Ethereum, and me, Elon Musk, will send you back two." Yeah, and there's Elon Musk talking about Dogecoin and with Cathy Woods, but that was like months and months ago, and the scam was really now, and actually got the stream taken down. Good old YouTube, I pinged them and they shut it down. But the actual video itself from months ago, they were talking about Twitter, or Musk was talking about Twitter should maybe look to make money out transactions with crypto rather than from advertising. And I thought, ooh, that's kind of relevant right now. So, but you need a crypto for that. Anybody can make a crypto. I got one myself. I made one myself. I made several myself. But to actually make it worth billions, you've got to have a use case for it. So once you have a Twitter coin or a Musk coin, or you use Dogecoin or whatever it is, Bitcoin is, it doesn't matter, and you've got a use case for it, that adds a huge amount of value. And all social media will have a wallet at some point in the not too distant future, maybe next year, maybe the year after. It's coming. And crypto will go to the moon, but it's going to go to hell first. It hasn't gone yet. So that's my model. I might be totally wrong. I've been wrong long enough. I'm expecting it at some point to break down. And if the Fed had come out and gone, oh yeah, 0.75%, oh yeah, 60 billion QT, let's call it 90. Boy, would Bitcoin be down in the low 30s right now.
Exactly. Okay, that's a good time to remind any viewers that want to ask a question to please drop a question in the chat so I can ask that question and
hey, it's the man.
The forum. Hi, Zach, the man of the IPO. How are you?
Yeah, that's right. Sorry?
How are you feeling?
Elated.
You can tell, can't you?
Yeah. It's like, this is my elated look. Just imagine if I wasn't elated.
Well,
actually, going IPO, I've got to tell the viewers, going IPO anywhere, US or the UK, is basically like being beaten up by a horde of lawyers.
Yeah,
in
but
fact,
also,
it's not like it at all. It's exactly what it is. You just get beaten up by a host of lawyers.
No, in my case, the lawyers and the accountants were actually very nice.
Oh,
that wasn't the issue.
You old contrarian, you. So what's your response?
I won't say where any problems stem from, but the lawyers and the accountants were actually light and fluffy.
Okay, well,
if anybody wants
well done
details,
for paying them on contingency then.
Okay, listen, Zach, we were talking about, at ETF as a good opportunity for people to invest and trade in this volatile market. What's your take on this? Are you doing any trading right now?
No, because I've got other things on my plate. I think having an IPO and a stock on the market with the exposure of that stock is quite enough excitement for me at the moment.
Aren't you precluded now, though?
Sorry?
Are you precluded from trading?
No, I think you have to tell the authorities, whoever they may be, what you're doing, and obviously because you've got to tell them, it actually puts you off doing anything at all. I think the other thing is if you trade and it goes down to the floor, that's fine. But if you trade and it sort of doubles and triples soon after you trade or you invest, then I suppose that's the thing with the regulation, that the success is suspicious and failure is okay. So that's the interesting part. But the best thing is to stay out of the game.
Yeah.
Well, it's interesting. If you insider trade and you lose money, they still bust you.
Sorry?
If you insider trade but you lose money, they still bust you.
Really?
Yeah, they still bust you. A lot of people have been busted for insider trading and losing money because, you know, you can imagine somebody says, oh, you know, BT is going to be taken over next week. So, you know, like an idiot, you go and buy loads of BT, and then if BT isn't taken over, and in fact the takeover falls through behind the scenes and the price collapses, and you know, you can still and people do still get busted for doing.
I would have thought losing money was punishment enough in itself, but obviously
the action of insider trading is not predicate on the result.
Yeah, well,
yes.
I think we need to stick with the be transparent and comply to rules. I think that's
especially in a recorded medium.
Yeah, exactly. No, but in general, you know, that's kind of like the long-term way to, you know, to stay alive.
I mean, the insider trading rules are incredibly important because you know that underpins people's faith in their ability to win. Because in the past, when it was not only legal, it was almost compulsory. People go, oh, I can't be bothered to play this game because I'm on the outside here, and you know the only people that are going to make money are on the inside, and therefore not going to play. So you have a drop in liquidity, and liquidity equals value. So you know the whole point about setting a level playing field with all these rules is to try to make the game as clean as possible, so that people have faith in the system rather than no faith in systems. And that's important because the more people that play, the more efficient the market is.
Yeah, exactly.
I mean, used to be back in the day, people who were speculators were lambasted as some sort of scum of the earth and that were terrible people, all speculators. And it took, you know, from the time when I was a child to about the time when I was an adult, for the idea that speculators increase liquidity, which help markets and prices, was that so that speculators were a good thing. So you know the whole idea about markets has completely changed. It was considered the worst thing on earth back in the sort of turn of the century. It was considered to be some sort of hell-like pit, an inferno of greed and evil. But you know nowadays, it's people think of it as you know one of those wonderful things in our society.
Yeah. Okay. Yeah. Well, definitely, I do agree on that. So I think it would be really interesting to see also the stock market to include the blockchain in their infrastructure. I mean, that's kind of one thing that we want to be able to trade 24 hours. We want to be able to trade on the plane when there is no connection.
Well, you don't need blockchain for that. I mean, they can do that now, but they choose not to. In fact, they're thinking about cutting down trading hours because it's too harsh on people's work-life balance unit. And also, it's considered to be a gender asymmetrical thing because it's much easier for men to show up for work at 8 in the morning than it is for women who might have children. So there's definitely a push to limit the trading hours, not increase them. And you don't need a blockchain to have increased hours. You just need the will to, take on some more staff to run shifts.
Yeah. Well, I think we are going to see some interesting things happening. I mean, I'm sure that many, stock market, financial institutions are doing some experiment. I mean, you just mentioned before about people accepting crypto for payments, and Gucci, I just saw, I think it was yesterday, they are going to start accepting 12 cryptocurrency in their store in the US, which, they are just one of the few, but, it is happening. It is happening. Cryptocurrency are getting into payments.
Well, I'm just going to say one thing. And
don't buy a Gucci handbag with a.
No. I mean, by all means, go ahead. Gresham's law. Now, Gresham's law means that it absolutely has to be true. It probably isn't because it's economics, but let's just call it Gresham's law. Says bad money drives out good, which means that bad money, i.e. rubbish money, drives out good money, or rather drives good money out of circulation. And crypto, I think, good money, and therefore people won't use it for transactions because they want to keep that. They want to pay with rubbish, i.e., paper money or plastic as it is now, plastic money. They want to pay with fiat because that's rubbish money, and bad money drives out good. So crypto gets stacked and not used, while fiat gets used because it's going down in value every day by 0.07%. So there's a real problem for crypto there. Gresham's wrong.
Yeah, I guess.
Sorry about that. Sorry to pour cold water on you on that one.
No, it's a bit like gold and silver. You buy a kilo of gold or a kilo of silver. You just stash it away, don't you? You're not going to be.
Exactly.
You're not thinking of using it.
Well, Gresham's law comes from the Middle Ages when they would dilute a silver coin with copper, and people go, "This is completely silver, and this one's half silver and copper. I'll spend that one, keep this one." And that's where the origins of that come from. Currency debasement causes the debasing and debased currency to be used, and that's not necessarily great for crypto use.
But Clem, I mean, we were talking in the past, episode about potential good projects in crypto, a part of stablecoin and the Bitcoin that perhaps it will be good for viewers to look into. And I remember when you mentioned Rarible. Are you completely pause your token hunting for now? No, not at all. I just wouldn't buy anything now. I mean, I think that, and I need to do more research. I think SushiSwap, for example, is a great product and is really cheap. But I do agree that they came out with an update on their roadmap, their strategy plan, and I thought it was quite interesting.
Well, I think if you think about what they are and their history, that they're a high risk outfit, and Uniswap, which is worth many times more, is also pretty high risk, but they are less high risk. And really, in this field, what you have to be able to say is, what's the first rule? The first rule is, how resilient are they? Are they going to survive, being hacked, or are they going to be Are they not going to be hacked? Are they going to survive being put under the death ray by the SEC and anybody else that wants to do that? How resilient are they? Are they going to be around in 3 years or 5 years? And when you ask that question, most of these things just vanish. You go, well, probably not. Could do. No, I'm not so sure. Blah, 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 blah. The ones that you go, yes, not many. And, that is the problem. So in a bear market, when you can't say these guys are going to be around in 3 years, for sure, why would you buy? Because it's going to take 3 years to get to the moon, maybe 5. So it's really longevity. I mean, you can even look at Bitcoin and go, 5 years? Yeah, probably. Ethereum, well, they're about to fork. What could go wrong there? I mean, what's that? I can't remember what could possibly go wrong. So it's quite hard when you look down the list of things that are going to be around in 5 years' time. And that's the first call that you've got to make. In a bear market, if you shouldn't, because it's a bear market, and you shouldn't if you don't see it being around in a bear market in 3 to 5 years. So, but you should be watching, because, take something like a SushiSwap. In 2 years' time, when all of a sudden everything's going up like that, it's not a long-term call anymore. It's a short-term call. It's, are they going to be around in the next 3 months? Yes, they are. Okay, and this thing looks like it's going to go to the moon. Jump on. When the market's going to go up, any fool can make money. When the market's going down, you've got to be absolutely extra special careful.
Clem, I just want to pick up on this because I was listening. Today I find out that Ethereum is going to go to Hollywood. So they are going to do a movie about Ethereum.
Vitalik, the movie.
No, they are actually casting people for the roles. Some kind of like the Facebook, movie that was released a long time ago. So I was thinking that could be maybe the way, really, some people, in order to actually understand what is crypto, they might are waiting for this big movie coming out and telling them.
It won't help them at all, will it? It will be a load of interesting and mainly objectionable characters behaving badly. And doing sex and drugs and rock and roll. I mean, that won't actually help anybody understand crypto. I mean, it helped them understand humanity, perhaps, probably not. But how did the social network help people understand Facebook? Normally, it's like the sign that something's reached its pinnacle when you appear in Hollywood. It's like when there's a crash, if you don't hear about it on the 9 o'clock news, it's going to get worse. It's only when you hear about it on the mainstream media news that the market has crashed that you know you've got the bottom. So, you know, I wouldn't, I don't need to be bearish. It's just that I am bearish and I'm long-term bullish. I'm massively long-term bullish, but there's no low-hanging fruit right now. No, none at all.
But Clem, it's going to be a Ridley. I don't know if I pronounce it okay.
Ridley Scott.
Exactly. He's going to be making the movie.
Aliens 4.
Yeah. The guy that made the House of Gucci, Blade Runner. I mean, this is maybe it's going to be interesting to watch it. I know NFTs are in.
Do androids dream of electric crypto? Is that what it's going to be?
Exactly. No, the Infinitive Machine. That's the title. But yeah, we will see. I think Zach, we should go and watch this movie together.
Well, I'm sure that'll be very
when it comes out,
and thrilling at the same time.
So Zach, what's your call on the market over the next couple of weeks?
I like the way that the markets are rallying on the higher interest rates. I think it is obviously fascinating that the Fed and the Bank of England are raising rates when we're probably already hitting a recession. So at some point, something is going to give. Either it's the economy will collapse because they've raised rates too much, or they'll have to back down. I would guess that they'll back down.
Well, Fed backed down on tightening yesterday. They're not going to tighten at 90 billion. They're going to tighten at 60.
Yeah, exactly. So there's the blinking, who blinks first thing, I think will come through. Bank of England is so stupid, though, that they'll probably just keep going and raising rates. And then there'll be a panic of some kind, and they'll take away stamp duty, and they'll do all the pandemic measures to keep the housing market going. So at the moment, I suppose the government's taxed people so much of late that it doesn't mind a little bit of blood on the streets in any area, really. I suppose they're also more concerned about the political thing of keeping Boris and losing the local elections today than the economy. But I can't remember when the Bank of England or whoever's controlling the Bank of England ever got the economy right. They're either too slow and things get out, too inflationary, or they're too hard. And so you just create that boom bust thing. And that's why it was great over the last 20 years when inflation was low, that the Bank of England their tweaks didn't ruin the economy. And it's like Gordon Brown thing of getting rid of boom and bust. But once the central banks start controlling the economy with interest rates, it always ends in tears. Always goes too far. It's always inappropriate. They never get it right. I don't even know why they bother. And I think, because
not doing anything might end up way worse. I mean, it's
it would burn. It would burn itself out. It's probably a bit like the pandemic.
So did the Sumerians.
Sorry.
So did the Sumerians. They burnt themselves out. Wasn't anything left after the burning ended.
I think the inflation will naturally cure itself because the higher prices stem demand. And then prices start going down again. I don't think you have to fiddle with the inflation rate to do that. People they're already stopping buying meat. They're already stopping lots of these discretionary.
But that's because they are becoming vegan.
That's very, very sensible, obviously. But that's not cheap either. But I think the point is that there's a myth of being needing to control inflation, because I think it's something that just it's a bit like the pandemic. The Spanish flu lasted 2 years. They didn't have any vaccines then. This lasted 2 years with the vaccines. It's just like you have a cold. If you take tablets, you'll be better in a week. If you don't take tablets, you'll normally be better in a week.
Yeah, that's actually good. That's actually fair. I agree on that.
It's just that the temptation of people in power to fiddle with things is obviously irresistible.
Well, I mean, that's why we put them there, isn't it?
What, to fiddle?
Yeah. That's what government is.
Yeah, I think it's government is a psychological necessity, like religion and countries, but I don't actually think they do anything for the.
Zach, you're an anarchist.
The net result.
You're an anarchist. Face it.
No, progress is made. progress is generally made by creative people and entrepreneurs, not by governments.
Well, government's meant to give the platform for those entrepreneurs and those scientists to do their thing.
Yes, the platform of red tape and all the other rubbish that they have.
Sure. I won't disagree. It's far from optimal, but I can see that you've got the anarchist tendency, the angry old man anarchist tendency that is one pole of the debate today. Me, I don't know. I think that somewhere between the 2 points.
I think maybe, Clem, you kind of like already accept that, and you are trying to maybe have fun in the way.
I think that's right. I think that's where Zach goes wrong. He's not looking to have any fun.
Yeah, because Zach, if that is the truth, it is the truth. What we can do, we just find ways.
I appear on this show every week, and that's my fun for the week. I mean, what else do I need?
Oh, that's so nice.
People to talk to, and normally I'm just staring at the wall, obviously. But no, I think just while we're on the investment side, I think there is, because Clem said there's not really much to buy. But I think on the investment side, there's, because of the lack of liquidity in the London market at the small end, the small cap end, a lot of the resources stocks have, the higher, the oil price has not trickled down to them. The commodities prices, whether it's coal or tin or whatever it is going up, has not filtered to a lot of the small caps, the 5, 10 million, 20 million pound companies. And I think there is an opportunity there. That trickle down effect takes a long time, especially in the London market, because it's so, it's not well run. And so there is an opportunity to buy an oil stock at 1p, and it was the same price before the oil price doubled and tripled. I mean, there's a company called United Oil and Gas. I don't know if I mentioned it before, but it's the same price now at 2.4p as it was when the oil price was $40. Well, I mean, if they're producing anything, which they are, that's unbelievable. So I think you can keep it simple on that front. That mispricing is there. Lots of gold stocks are still very, very cheap compared to where they were before. Obviously, yeah. You tie that. So the lack of liquidity is actually something you can actually get going in your favor.
That's true. There is big lack of liquidity. But talking about oil stock, I was amazed today by a small, minor. You probably remember UK Oil and Gas. They got environmental approval for the wholesale beast project in the UK, and the price went up. When I saw it went up to 75%, now it's around 43 or something. I was amazed because I said, actually, it can happen again. There are a small cap stock that can go above 50%, which we haven't seen for a long time.
From my understanding, they've got the green light. They've been waiting for years to get access to the billion barrels under Gatwick. And obviously, it's taken the Ukraine war to get the local council to say, okay, yes, we need oil, and you can have it. Otherwise, they were prevaricating for years. And that's another thing, actually. A lot of these permissions, the North Sea, they basically closed it down because of the green lobby, and we're going to open it up again. So I think there's a lot of this, the red tape on the, gas and oil in the UK onshore, and obviously the North Sea as well. Hopefully the companies which are going to benefit, because until February, most of them are just saying, the ESG and this and that, but we've got to, we can't produce oil. We have to produce oil sustainably and all this sort of rubbish. And that is going to be a big change. So I think that is checking out the companies which are in that area.
Well, Enquest was a winner that, that you did mention to us, Clem. I was, yeah.
Well, it's still there. See, what you have to understand is, it's like, we've had two families, two groups of Ukrainian refugees staying with us, and they've both pretty much gone back, or one's actually gone back, and one group have gone to Germany because they really, really, really want to go back home. But it's not going to happen because this war in Ukraine is going to go on for years, 2 or 3 years, 4 years, who knows how long it's going to go on for. So
won't it only go on for as long as Putin goes on? Let's say it's related to his life expectancy.
Yes, well, I mean, I think that's absolutely right. But normally these dictators only get to dig in deeper when they're in this situation, because they can always point at the enemy abroad to bolster their support. So he's not going anywhere soon. So 2 or 3, 4, 5 years of this energy insecurity dynamic. Well, that puts a copper bottom, would appear to, under energy and the energy price, and it knocks on the head ESG. Because I mean, think about it. Okay, you've got a war. Okay, the first thing you're going to do is knock your windmills down. Any fool could do that. You don't need to have Top Gun out there and running a dangerous mission to knock down a load of windmills, do you? So your energy security, it goes to hell in a handbasket in these situations. And so you've got to boost that, and it's much harder to wreck a diversified portfolio of carboniferous supplies as well as sustainable supplies. And on top of that, there was going to be a huge shortage of energy anyway, because if you have all your cars running off electricity, you haven't got enough power stations. So the oil and gas and coal guys, they're back, and they're going to be back for a decade at least. So that's why coal's been going through the roof, because obviously it's gone from zero to hero, or certainly gone from devil to angel. I remember, and that's the cheapest, nastiest of all the carbon fuels, and coal producers gone ballistic.
Whose fault was it to go from hero to zero? Just reiterate whose fault it was.
Well, it's not a question of fault. I mean, if you are a supporter of the idea that human beings are pumping out ever increasing amounts of CO2, and that's bad, then coal is the first one to knock out, because that's the big CO2 emitter, and therefore it's been on the top of the list of we do not want. And now it's energy, because of the Ukraine thing. You want all the energy security you can get, and coal is dead easy and highly secure.
You can't get rid of a source of energy without having, prior to that, an alternative already ready and up and running. Exactly. It was mad. But where's Greta?
I mean, they've managed to get rid of a large amount of coal use in various societies, for sure. They've got rid of a lot. I mean, coal mines in the UK gone, right? So, but they're going to make a comeback. It's not a question of whether it's right or wrong. It's not a question of whether it's good or bad. It's a question of what's going to happen.
But this is the same concept that we are facing with crypto. You can't say that now crypto is going to replace finance right now, because there isn't an infrastructure that complies with things. So we're still in a transition. It's kind of the same.
Well, okay, you can put that another way. If you went back 200 years, all money was physical, give or take. Well, I mean, there was actually quite a lot of paper money going back a long, 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 long way. But right now, most money is digital. So when you talk about crypto, it's not as if money hasn't already gone digital. You're just talking about whether it's on a blockchain or whether it's got an encryption component or not. So it's really just, it's like comparing apple and pears. Well, they're both fruit, right? And it's crypto and fiat is like apples and pears. They're both fruit. They're both digital currencies. Our fiat money is centrally based digital currency without encryption. Well, actually, there's quite a lot of security attached to fiat money. And crypto is blockchain and all the things that go along with blockchain and Bitcoin style crypto money.
Yeah. Well, but as you said, opportunities. I think the energy reflection that we did is
all things energy are going to be hot now.
Yeah.
All things energy, because the moment of truth, which was coming in 2 or 3 years, is here early because of the Ukraine issue. How are we going to power cars with electricity when we've got enough power stations? How are we going to secure our energy supplies? Well, they will build thousands of windmills in the North Sea, which is a smart move. And people will be charging their electric cars from windmills in the sea. Wind power is actually as cheap as any other form of energy. Is actually not more expensive than oil or gas. So they've actually cracked that one. The point is, how do you store it? Well, that's going to be hydrogen, isn't it? And that's your platinum and your palladium and your fuel cells. And that's going to be a hydrogen economy is going to come out of that. So, that is already going to be happening, but it was going to be happening in 3 years' time.
Yeah. When
everybody started to say, oh, not enough power stations, when that neuron in the tail fired and finally got to the dinosaur's brain. Well, the dinosaur has been woken up 3 years early that it's got to get its energy policy sorted out because there ain't enough of it.
Yeah, so perhaps a good time right now to get, for people to research, to identify, to look for opportunities, and then when time comes, start to put their position in those.
What are the things? The things are inflation, yeah,
energy,
turmoil, yeah, energy, yeah. So how does that all global warming, or whatever they're calling it these days, how does it all come together, right? Well, commodities that are to do with a sustainable energy and give us more secure energy supply, well, that would be a good place to be, wouldn't it? That'd be a nice intersection. What are the intersections of the solutions of the problems that are ahead? I mean, one out of, if there's 5 things that you think are going to happen, if you have something that does one and something that doesn't, try to get an intersection of 2 or 3 of those ideas, and you're golden, aren't you?
Yeah, find the intersection. That's good. That's
why I'm not selling my platinum, because platinum is a precious metal. You can't, and it goes into all these gadgets and stuff. And well, not just gadgets, but all the hydrogen energy future and all the sustainable energy future. Platinum's going to play a pretty big part in that. So, and it's also, they make hardly any of it. It's such an insanely small amount mined every year. I have to go back and check my number because it's so small. Yeah. It's something like 1,000 tons or 100. It's just a ridiculously small amount. So that's the sort of thinking you have to do. Get those intersections on the things that worry you, where you think there's opportunity in the markets.
Yeah, okay. I think that's a perfect line to just wrap everything up. So I'm just going to say the next week there won't be as much investing because Clem is going to be in London and we have to get around and about with his new hedge fund. So if somebody is interested in kind of getting exposure or includes that in
no, you can't say that. You can't say that on a broadcast. You can't promote.
I was not promoting. I was
not against the laws in 47 countries.
I was not
lock you up in Antarctica and throw
I was not promoting. I was just saying. I was not promoting anything. This is not financial advice. Everybody needs to do his own research, but still.
No, that doesn't count. That doesn't count. This is not a financial promotion.
That's not financial promotion.
Yeah,
but,
there you go.
Just to say.
We're safe. The police cars are going back to base now.
Okay, so thank you everybody for watching. I will see you next week.